2025, what does it look like for real estate investors? We're going to briefly look at what the national people say, but we're going to take a different approach. We want to show you a few tricks on making interest rates work for you, understanding what's going to happen in the consumer market. If you're doing flips, it really comes down to affordability. How many people can afford your house at your price point? How to make your house more affordable for a bigger pool. The more people that can afford your house means there's going to be more competition, more people looking at your property, sell it faster or sell it for more. On the rental property, what are your options out there to get a better rate so you can get a property to qualify or to even just make more money? Either way, you're looking at putting more money in your pocket if it's a flip or a rental. How do you do that in 2025? Let's take a quick peek on what the national people are saying about interest rates, where they're going to be for 2025. Let's start out with the Fed funds, because everyone talks about what the Fed's doing, how that impacts you as a real estate investor. It impacts you more on the fix and flip and bridge loans, but even a 1 or 2% decrease in the Fed funds, meaning a 1 or 2% decrease in your private money, is not going to put a lot of money in your pocket. For instance, $300,000 loan, rates go down 1%, you carry it 6 months. That's 1%, $3,000 divided by 2. That's $1,500 more coming into your pocket. Yes, it helps, but it's not as big as impact as the other side, the consumer side or the long-term loans. What do those look like? So in 2025, we have, of course, just all kinds of different opinions. The NAR, the National Association of Realtors, they believe interest rates are going to hover between 5.5 and 6.5 for your conventional rates. But they were completely wrong with their 2024 outlook. They're always looking at the brightest picture, and that's what we're hoping. We're hoping that rates dip into the 5s, but we're not sure. A lot of people think that rates on the conventional and even DSCR are going to be somewhere in the 6s and maybe low 7s. Whatever they are, you need to figure out how to make them work for you to maximize everything you can, either out of your flips or your rentals. So first of all, let's look at how interest rates impact you as a flipper. Let's look at a couple different numbers just so you could picture and see how you could put more money in your pocket by just making sure you are working the interest rate game. So let's say interest rates for consumers right now are 7.5%. And we have a consumer, and we're just trying to show you how interest rates impact your borrower, because the bigger the pool, the more people that the property becomes affordable for, that you can make it affordable for, will impact what you could sell it for and what you can make. So at 7.5%, they're going to be able to afford a $400,000 house. Now let's look at 6.5%. So if rates go down, or you're able to manipulate the rates to get to 6.5, now they can afford $440,000. So rates went down 1 point, but the ability for the market to afford just went up to 440. Payments stay the same. Maybe that's what's in their budget. Maybe that's what they qualify for, whatever it may be. But their ability now has gone up to 440. So you could see as interest rates go down naturally, or if you could create those interest rates to go down, you have now created another 10% on this property, or a bigger pool, more people who can afford your property by making it more attractive. But what happens if NAR is right and they go down to 5.5%? Now you see that same pool of people who can afford $2,800, who qualify, who can get through underwriting at $2,800, go from $400 to $440 to $490. Interest rates matter. Interest rates matter when the consumer is out there looking not only that fits in their budget, but what they qualify for. As a fix and flipper, your ideal market is when there's a lot of people bidding, coming looking at your properties, wanting your properties that you could get the most for, is when interest rates decline. That, of course, makes sense, but it's always good to show this with the numbers here. But there is a way, as a fix and flipper, we've helped other people. We do a lot of coaching in not only finding the best loans for you, getting the cheapest cost for you, but techniques also. Here's a technique when you're looking at, if interest rates are here or even here, how to get more out of your property by changing the interest rates by yourself. What do I mean by you changing the interest rates or you making this a better 2025 by making sure you have the best rates out there? It's a little trick. It's spending your time and understanding how interest rates work, how it impacts your buying pool, all that stuff. But let's look at that same property, and you're going to want to go from 400 to 440. Or maybe you're at 440 and you want to sell a property, but interest rates are 7.5. What can you do as a seller to make sure you maximize your sell price without cutting it, without doing the 5 or 10% cut out there to get the market the bigger pool? And one way is to buy down the rate, not only a temporary rate, but the permanent rate. And typically what that means is from going from 7.5 down to 6.5, it'll probably cost you in this market around 2.5% of their loan amount, not of the purchase price. What does that look like? Well, typically if someone's going to buy a property, and let's say you have a property priced out at $440K, $444,000, most are going to put 20% down. Maybe they don't, but most will put 20% down. So their loan is going to be 80% of the 440. This comes out to a loan of $352,000. So for you to move from 400 to 440 or to keep it at 440 instead of going to 400,000, we're creating a market to keep our prices either higher than everyone else's, get it sold at the price you want without cutting your amount. We're making 2025 better by not only waiting and hoping that interest rates come down, but also creating that when we're looking at selling the property. In this case, 2.5% of $352,000 would mean it would cost you a little over $8,000 to buy their rate down so they could qualify, so they could keep their payments where they need to. In this case, 440 instead of going to 400,000, you just saved $31,200 from going from here to there. You made your property more attractive. Your buyer pool increased by affecting the rates yourself on the properties that you're doing on the fix and flips, especially in this market. Even over last year, we've been coaching people to look at permanent buy downs or even temporary buy downs to get people into property. The other way to do that is lowering your 440, cutting the 5 or 10% down. 10% down at 440, just cut $44,000. Or 5%, it's a little over $20,000 compared to 8.8. It's going to be more affordable. It's going to be more attractive to you in 2025 to take some of these secrets out there and affect the rates yourself. And by doing this, you're just going to put more money into your pocket, make your properties move faster than everyone else's, work with the system. Our pool of buyers has to be larger, which means more people have to qualify. And if your properties qualify over other people's at the same price, good for you. You're going to make the money in 2025. So that's on the fix and flip, making sure you maximize your dollar amounts on the fix and flips. How about in rental properties? What is the trick in this market to make sure that you can either maximize the amount of money or the cash flow you're making on a property and or just qualify, because you need to make sure the DSCR ratios work. And with rates, hovering around 7% on DSCR and even conventional rates, how do you get that lower so you could actually put more money in your pocket and, like I said, qualify, buy another property? Our whole goal here at the Cashflow Company is to make sure you understand all the products that are out there available. If we offer them or not, we focus a lot on coaching people through not only DSCRs, conventional, but even what we're going to talk about now. Making rental properties work in 2025, and that is looking at another option. So let's look at a loan amount of $250,000. A loan amount right now, $250,000. The principal and interest on a DSCR at 7% comes up with a little over $1,600, $1,664. Now let's look at an option for this, creating your own market or knowing the products in the market. Right now, locking into a DSCR, especially if we think interest rates will go down a point, 2 points in the future, what are the options? The options out there are banks, local credit unions offering loans on rental properties. Typically now we see in the low to mid fives, but let's just say 7.5%. Now these are not 30-year fixed. Typically they're 3 to 5 amortized over 30 years, meaning they're fixed for 3 years, 5 years, but it's a perfect product to get into in this market because there's no prepays, interest rates go down, great, markets go up, you can sell it, whatever it may be, but this is going to cut off about $200 from this $250,000 loan. It's going to be about $1,458. So a little over $200 by knowing your products, what's available and what's out there. If I'm in this market and I'm looking at a rental property and looking to get the most out of it while we're waiting for it to settle down a little bit, I would look at a local bank or local credit union. It is a great option to increase your cash flow and or just qualify for the loan based on the cash flow, because if this property is renting and you need a PI to be around $1,500, it's not going to qualify with the DSCR unless you do another trick, which is buy the DSCR rate down and keep it at that 30-year fix. So where do we see 2025? We don't see it improving or decreasing much. There's going to be this bounce between maybe best case 5.5, maybe 7, 7.5, depends on what's happening in the world. For us to make money in any market, we have to understand interest rates, markets, and creating our own demand for our flips and getting the best pricing that we can on the rental properties. So let's make 2025 a great year. Understand interest rates, understand how you make them work for you, and how you can make your market a little bit bigger. If you have any questions, reach out to us. We coach people on how to get the best rates, how to get the best terms, how to maximize their profits on a property. We don't have to do a loan. We have 20-some plus years of working with investors. We've seen everything from commercial to DSCR to conventional to bridge loans, whatever it is, we've seen thousands of different deals. If you're looking for a second set of eyes, someone who could look at it and help you get the best deal, reach out to us. We'd be glad to help you. And we hope you have a great, profitable 2025.